Hey guys, all right, today let's take a closer look at this bounce that we've gotten off the Brexit a couple days ago. So right here, let's see, right here you can see, here's the bounce. You can see we've gained back just about everything that we lost after the Brexit. We had this sort of V-shaped decline in recovery. I'm right down here in the bottom right-hand corner of your screen. So it's pretty significant. Um, So I wanted to look at the dollar index because a lot of people talk about the dollar and the pound being sort of the driver of the movement around Brexit. So up here in the top left-hand corner, here we have the dollar index. So this is the jump from 93.5 to 96.5 immediately after the Brexit vote, and everyone expected that to continue on. So I think that's why everybody expected the stock market to keep falling. However, it didn't do that. So you can see the dollar index kind of stopped right about here. It kind of retested it, and then since then, on the 26th, at the end of trading on the 26th, the dollar's been retracing. So now it's back down to 95.5, and it's just been kind of going slowly lower. And you can see that that's exactly what happened um, with the timing of the S&P 500 as well. So the rebound started at the same time as the double top. So we're going to show you, here's the double top, and so it was right about at exactly the same time. Now, the one thing I want to mention is the correlation. So there is a correlation between the dollar and the S&P. Now we talk about the dollar going up and the S&P going down. And even right here, when the dollar has been increasing, or sorry, the S&P has been increasing and the dollar has been decreasing, that is what you'd expect. But you can see that the dollar decreased about 1% and the S&P 500 increased about 5%. So it's not a perfect correlation, and that's important for you to know. But there is some correlation. So whether the dollar keeps going down, that would indicate that the S&P 500 would blow through this trend line that I've drawn right here in the bottom right-hand corner. See this trend line? If it blows through that trend line, then we might be looking at an increase or at least continuation of this rally that we've had. If it doesn't get past it, then we may see some trouble down below. And one thing to note too with the S&P 500 is, so the range of these movements increased, right? So this one was really big, obviously. And generally, that's a negative sign for stocks. So if you see that kind of movement, even if it's going upward, that can be a negative movement, a negative indicator for movement going forward. All right, well, we'll see what happens next week. Today is the start of the second half of the year. A lot of calls are for a recovery in earnings for the second half, which will be very important for the S&P 500. Earnings season starts next week. Well, within the next couple weeks, it'll ramp up, and we'll see how the results come out. All right, guys, have a great 4th of July, and trade strong. Thanks.